Hello, friends. Many viewers have been asking questions in the comments recently, and I noticed quite a few new people joining this channel. So today, I want to return to a topic that keeps coming up often. There are 5 payments that a great many older adults are legally exempt from right now in 2026. And the reason most individuals are still covering them has nothing to do with not meeting the requirements. It's because nobody mails you a notice. Nobody reaches out. The funds just continue departing your account every month because the entire setup is designed so that you have to request first. Today, I'm covering all 5 in simple terms with precise instructions and contact numbers. If you followed this channel for some time, some of this may be recognizable, but the guidelines have updated in a few areas this year, and I want to make sure everyone receives the complete information. Before we begin, subscribe right now and turn on the bell. When guidelines like these update, I discuss it here first. Subscribe now, and let's begin. Let's start with the payment coming directly from your Social Security payment every month that a large number of older adults are covering when they legally do not need to. If you have federal income tax taken from your Social Security payment, that withholding is based on a W-4V form you completed at some point where you selected a flat percentage, 7%, 10%, 12%, or 22%. The SSA has been using that rate on every payment since. They have not examined your tax return. They have not verified if your income changed. They're following the original direction month after month. Is your Social Security actually taxable? Add up all income outside of Social Security. Pension, IRA withdrawals, interest, dividends, any part-time work. Add any tax-exempt interest. Add 50% of your annual Social Security benefit. If that total is below $25,000 as a single filer, your benefits are not federally taxable. For married couples filing jointly, the threshold is $32,000. Below those numbers, any withholding you have arranged is a prepayment of a tax you do not owe. The solution: download the W-4V from irs.gov. Select 0 or a lower rate and mail it to your local SSA office, not the IRS. The SSA processing takes 30 to 60 days. Bill number 2 is brand new. It expires in 2028, and too many people are either missing it entirely or not claiming the full amount. The One Big Beautiful Bill signed in 2025 created a new senior-specific deduction that stacks on top of your existing standard deduction and the existing age add-on for being over 65. If you are 65 or older by the last day of the tax year, you can deduct an additional $6,000 from your taxable income. For a married couple where both spouses are 65 or older, you each get your own $12,000 total. Not split between you. It is claimed on Schedule 1A and it phases out gradually for single filers with income above $75,000 and for couples above $150,000. Below those thresholds, it applies in full. Here is what concerns me based on what I'm hearing from people in the comments. Tax preparers who haven't fully updated their workflow for the 2025 tax law changes are missing. This software that hasn't been updated is missing it. If someone else does your taxes, say these exact words before you file. Did you apply the new senior deduction? The $6,000 or $12,000 if we're both over 65? Make them answer that question directly. This deduction runs through the 2028 tax year and then expires unless Congress extends it. That means this year, next year, and the year after are the window. Don't let it close without using it. Bill number 3 is the one I want to spend the most time on because the numbers here are the largest, and the gap between who qualifies and who's actually enrolled is enormous. Every month, $202.90 is deducted from your Social Security check before you ever see it. That's the standard Medicare Part B premium for 2026. For millions of seniors, that money does not have to come out of their check at all because there is a set of federal programs called Medicare Savings Programs that pay the premium on their behalf. Most people who qualify have never heard of these programs, and as a result, the money keeps leaving their account every single month for years. The most comprehensive of these programs is called QMB, Qualified Medicare Beneficiary. If you qualify for QMB, the program pays your full Part B premium, your Part A premium if you have one, your deductibles, and your co-insurance and co-payments. Your out-of-pocket Medicare costs go to essentially zero. In 2026, the income limit for QMB is $1,350 per month for a single person and $1,824 per month for a married couple. Those are the national figures. Some states set their own higher limits. Here's the part that trips people up on the income calculation. The first $20 of most monthly income is not counted. If you earn anything from part-time work, the first $65 of that is also excluded, which means your actual gross income can be somewhat higher than those threshold numbers, and you can still qualify. A single person receiving $1,350 in Social Security might actually have gross income of $1,370 and still come in under the counted limit because of the $20 disregard. If you're anywhere near those numbers, it is worth applying and letting the state calculate your exact eligibility rather than assuming you don't qualify. There are also two higher income tiers, SLMB and QI, that cover the Part B premium only for people who earn a bit more than the QMB limits. SLMB covers income up to $1,616 per month single and $2,184 for couples. QI goes up to $1,816 single and $2,455 for couples. All three programs also automatically enroll you in extra help for prescription drugs, which caps what you pay per medication at $12.65 for generics and brand name drugs in 2026, regardless of the actual sticker price. There's also a rule change from April 1st, 2026 that's worth knowing. If you financially support adult children or grandchildren who live with you, they now count toward your household size for MSP eligibility. A larger household size means a higher income threshold, which means some seniors who were just over the line before April may now qualify under the updated calculation. Roughly 10 million people are enrolled in these programs. Independent estimates suggest several million more are eligible and haven't signed up. Not because they were turned down, but because they never knew to ask. When you call, use these exact words. I want to apply for a Medicare savings program. I think I may qualify to have my Part B premium paid. That sentence starts the process. The number is 180 Medicare. That's 18063342227. Bill number 4 is one that homeowners are overpaying every single year, and it has nothing to do with Social Security or Medicare. Property taxes. Every state in the country offers some form of property tax relief for homeowners 65 and older. Some reduce your home's assessed value before the tax rate is applied. Some freeze that assessed value on the day you qualify, which means your bill stops climbing, even as your neighbors keep rising. Some allow full deferral until the house is sold. Texas seniors get an additional exemption, plus a freeze on the school tax portion. Florida has significant reductions for long-term residents, with some counties going further based on income. New York recently expanded local authority to cut assessed value by up to 65% for qualifying seniors. Oregon, Minnesota, and Massachusetts offer deferral programs where the tax accumulates as a lien, but you pay nothing while you live there. Same pattern as everything else on this list. Not automatic. Your county assessor knows your age. They will not apply the exemption for you. In most states, the filing window opens in January and closes around April 1st to May 1st. Miss it, and you lose the entire year with no recovery. If you have owned your home for years and never applied for a senior exemption, you may have been overpaying the whole time. Call your county assessor. The number is on your property tax bill, and ask, what senior property tax exemptions, freezes, or credits am I eligible for, and what is the deadline to apply for next year? Write that deadline on your calendar immediately. Bill number 5 is for seniors who are paying a higher Medicare premium than the standard rate and don't realize one free form can fix it. If your income in 2024 exceeded $109,000 as a single filer, or $218,000 as a married couple, Medicare added an IRMAA surcharge on top of your standard Part B premium, anywhere from about $70 to over $400 per month per person. Here's the trap. Medicare uses your tax return from 2 years prior to set your current premium. Your 2026 premium is based on your 2024 income. Income that may no longer reflect your situation at all. This hits hardest when there was one unusual income year in 2024. You sold a house. You took a large IRA withdrawal. Your spouse passed away, and the household income shifted dramatically. Any of those can spike your 2024 income into a surcharge bracket. And if your income has since dropped, you're paying an elevated premium based on a year that no longer represents you. The form is SSA 44, one page, free to file. You submit it to Social Security explaining that a life-changing event reduced your income since the year Medicare is using. If approved, they recalculate using your current income instead. Call 1-800-77-21213 and say, "My income dropped since 2024 and I want to file Form SSA 44 for a life-changing event to have my Medicare premium recalculated." Bring documentation, retirement date, final pay stub, real estate closing if applicable. So here is the complete rundown of all 5. 1, if you have Social Security tax withholding set up and your provisional income is below $25,000 single or $32,000 married, file a new W-4V to stop the withholding. 2, make sure whoever handles your taxes has applied the new $6,000 senior deduction, or $12,000 for couples before you file this year. 3, call 1-806-334-227 and ask to apply for a Medicare savings program to have your $202.90 monthly Part B premium covered. 4, call your county assessor and ask about senior property tax exemptions, freezes, and filing deadlines. 5, if you paid an IRMAA surcharge based on a high income year that no longer reflects your situation, file Form SSA 44 with Social Security to request a premium recalculation. None of these requires an attorney. None of them costs anything to file. Every one of them requires you to initiate it, because not one of these agencies is going to call and let you know the money is available. Subscribe. Share this with someone you know who's on Medicare or Social Security.